Good afternoon and welcome back to the NWR Investor Conference Series 11. I'm your host, Banjo Blake, and up next we have Generation Development Group. Generation Development Group is involved in marketing, management of life insurance and life investment products, and it provides services to the retail sector in Australia. It also provides administration services in the financial services industry. The company operates as a registered pooled development fund, specialising in providing development capital to the financial sector businesses. Its status as a pooled development fund provides favourable tax benefits to the group and its shareholders. Joining me this afternoon is Managing Director and CEO Grant Hackett. Grant has been part of the company for a total of 4 years, but took on the CEO position in early 2020. Thanks for your time today, Grant, and welcome to the conference.
Thanks very much, Banjo, and thanks for hosting Generation Development Group today. So we'll kick off the presentation to give a little bit of context about what the group does, some of, I guess, on the investment side, the incentives around investing in GDG, some of the growth that we've received over the past few years, and it's certainly turbocharged probably over the last 2 or 3 years, but particularly this financial year, we've seen a real step change or a material change in the growth of the business. You'll have to excuse me where I'm presenting from today. I'm actually out on the road. I'm in Newcastle, sitting in the car because I'm out seeing several financial advice practices today to discuss our new investment-linked lifetime annuity, or life income as it's called, which was launched just a little over a month ago. So one of the things I like to do as CEO is make sure that I get out there and talk to the market and see what's going on, see the interest in the products, get the feedback. So that obviously influences our strategy moving forward, given 92% of our total inflows that come into GDG or Generation Life come from the Financial Advice Network. So a little bit about GDG or Generation Development Group is the fact that we have this pooled development fund license. So what does that mean? That means any capital gains that you receive on our share price as an investor, or any tax or any dividends, that you receive as an investor, are actually tax exempt. So it's a great incentive to invest in the group. So if you add growth from $1 to $2, you get that full amount. It's a license that the federal government gave out about 20 years ago to a lot of growth sectors in financial services, biotech, or even mining, energy and resources. And it's something we've managed to retain at Generation Life. There's 2 core businesses that sit under GDG, the ASX listed entity, the holding company. One is the wholly owned group of Generation Life, is obviously our life insurance business, where we sell our investment bond and now a new lifetime annuity. And on the other side of the business is the research business, which is Lonsec, which is a well-known brand to many people. And we have a 41% equity stake in that particular business. Moving through to the next slide, you can see here, this is some of our 3-year CAGR numbers within the business. And firstly, we'll kick off with sales, which is that 46% in sales that you can see in the increase there, and the growth over the last 3 years. So some really, really strong numbers. That's obviously resulted in some strong FUM growth. So the FUM growth of 32% year on year for the last 3 years. And that's transferred then into strong underlying NPAT. So 59% year on year. And like I said, we're in the middle of our best financial year yet. So some really, really strong financial performance from the group. One of the things that I love about our investment bond business, and this is going to be even more so in the lifetime annuity space, is the fact that every dollar that comes into the business has an average life cycle or duration of 15.7 years, which is quite phenomenal. So, you get that money in the door, it's going to sit on our platform as an annuity stream, generating revenue for almost a 16-year period. One of the underlying ethos of the business, and one of the strong value sets that we have as a group, is around innovation. We're always looking at new ways to be able to solve some of the complexities in retirement, or some of the tax issues that some of our clients might have, by creating tax effective products, or products that have good momentum, or solve some of the problems in post-retirement phases for people within Australia. So we've definitely demonstrated that with some of our products. So you can see here we've got our Tax Aware series. So this is where we've been able to get a lot of our effective tax rates for our investment options with our investment bond. And just to explain what an investment bond is quickly, for those of you who don't know or understand that, it's an after-tax paying product. So it's a legal tax structure that you invest in like you would if you had a trust or a company or your own name or your superannuation. And the most comparable one is superannuation. And the reason that's the case is because it's the only other after-tax paying structure, which is what an investment bond is, with a maximum tax rate of 30% instead of super of 15%. But the big difference is the liquidity. And what we've been able to do is maximize, I guess, the tax rules that have been around for a very, very long time within this structure and get our effective tax rates down for a lot of our growth strategies. So we have 62 investment options covering all the major asset classes with multiple options within each. And we've been able to get our effective tax rates down between 12 to 17% on average. So there's a significant tax arbitrage for someone on a high marginal tax rate or even on that 30% sort of plus rate, if you will. We've also managed to create high yielding products out of that are very tax effective, such as our equity income fund. And I'll talk about the performance a little bit later on. And also something that I'm super excited about is this launch that we've recently had around our investment linked lifetime annuity that's called Life Income, that helps address the income requirements for people going into retirement. I've already touched on the top right there, the PDF and the incentives and concessions that are around that. We're very much a capital light business model. So of our overall fund, the only capital that's required is a little bit of operational capital, which is around 40 basis points. Right now, in terms of the momentum, which has really been the hard work that we've done over the last 5 or 6 years, is what we have a very positive sales outlook. And one of the key metrics, and I'll go to the scoreboard in a second, is around our active financial advisor numbers. And what that means, that's a person who's written one or more financial products with us on a 12-month rolling average. And we're always looking, just on the last point here, to really utilize our life insurance license to be able to come in with product solutions for financial advisors and their clients that make strategic sense to being able to cater for their own financial needs. Moving on to the next slide, which is a quick financial snapshot. This is our half-year results. So it's the best half that we've ever had in the 18-year history of the business. And you can see there, revenue was up 43% there on the top line. Expenses was up 40%. Now, the big thing with expenses that you need to be aware of is the fact that 20% of that 50% of that 40%, sorry, is made up of pass-through costs. And what those pass-through costs are, the cost for mandates, so they're obviously equal on both the revenue and the expense side, but also a cost called settlement and dealing costs. And what that cost is the financial advisor cost, or their fee that is between them and their underlying client that invests in the product. And that just goes through the product. So it's not necessarily 40% growth, it's only half of that. And I have to say that of the other 20% of cost growth that we got in the business, that about 700,000 or 800,000 of that $4 million that you can see in there in the change section that's in brackets is made up of the extra incentives that the BDMs have earned because of the 107% increase in sales in the first half of this financial year. That's then driven the underlying NPAT of 3.34 million that you can see. The income from associates, which is mainly made up of our investment, that 41% stake, in the Lonsec business of that 952,000. Now, we wanted to really pull out, just to give absolute clarity on the financials, the cost, the development costs you can see there on our life income product, which is that lifetime annuity, which was 1.4 million for the half. And then you can see the underlying profit. Dividend per share stays unchanged at 1 cent. And you can see the total funds under management is 2.1 billion at the end of the half, and cash equivalents on hand just under $20 million. Moving into the next slide, which really talks to now the scoreboard of the business. And there's 2 key metrics that I'll really pull out here. I've already discussed the FUM. And again, this is the first half numbers. So this is 31st December numbers for the first half of the financial year. Moving into live product sales, one of the real drivers of the business. We like to keep our metrics very, very simple. And this is the big one that counts. That's up 107% to 344 million. We'd only been through 300 million in total sales in a given financial year on 2 occasions, which was the last 2 financial years. And we did it in the first 6 months of this financial year. So a real step change in the inflows and the sales and performance of the business. You can see there, as of the 31st of December, we take 48.6% market share of inflows in the investment bond space. So we really are the dominant player. And also, that continues to grow. The one thing about the market share data that we're seeing now is that the industry of the first 2 quarters of this financial year actually grew by 50% in terms of total inflow opportunities. So we've taken more market share of a growing pie, which is really encouraging. Approved product list, absolutely critical to being able to get distribution of your product, up 20% to 544. Product ratings, highly recommended for 15 years now with Zenith. and also highly recommended with Lonsec for the last 5 years. This is the other key growth driver of the business, is that active financial advisors. So people writing business with us on that 12-month rolling average that I discussed. That's up 21% to just over 1,600. New bond numbers, 10,774 for the half. Just to give a little bit of context around that, on the first year that I came into the business at the end of FY17, we had total bond numbers of 2,266. You can see now we're doing that in the space of a month or less. Savings plan. So every time someone writes a new investment bond with us, often they attach a savings plan with it, and that's up 23% to 30 million. And we have 58 investment options at the end of the half. We did a supplementary PDS launch less than 2 weeks ago, which has now taken that up to 62%. And you can see there the average maturity profile. Just coming into the next slide, and just conscious of time because I've got about 15 minutes and then we'll take some questions. So I'll start to whip through it a little bit quicker. This talks about that market share data. So you can see there on the blue bar chart, that's market inflows. The line chart is total market share. So number one in total market share is Australian Unity, but you can see we're really closing that gap. What you want to see is the biggest disparity between the top of the bar chart and where the line chart is. So where the line is, and that disparity means you're taking more than your natural market shares. So you can see there from our main competitors being Australian Unity, Futurity, Centuria, and also Insignia, which is the old IOOF brand. We're taking some of their market share to get more than our natural market share, which continues to grow. Coming through into the next slide, you can see here around just some of the performance over the past few years. So the 5-year CAGR numbers. So back in March of 18, so this is taking us now to the end of the most recent quarter, which is the third quarter, the March quarter of this financial year. The huge amount of growth that we've got every single year and the compounding effect of that. So sales from March 2021 to March 2022 are up significantly, around that $600 million mark for the year, to take us to almost $2.2 billion in total funds under management. And you can see on the right-hand side here, what's super impressive about this, from years FY18 through to FY21, you can see on the bottom part, the x-axis of this graph, is that they're full year numbers. And on the full year numbers there, you can see our best year that we ever had was at 404 million. To the end of the third quarter, so only 9 months of this financial year, we were already 20% up on that number to 484 million. So like I said, a big step change within the business. Coming through onto the next slide, we'll talk a little bit about some of the other businesses that we have. But first, actually, sorry, I'm just going to touch on this profit per employee. One of the most important aspects of, I guess, any business that's managing money is obviously getting that operational leverage within the business. So you can see here in FY20 to FY21, the scale of the business now, we're really starting to see that operational leverage. So the profit per employee was sitting around that, just over that $50,000 mark, where you can see it's close to that $80,000 mark now, employees. So again, there's some seasonality in these numbers. So we always want to do this at the end of the full financial year. Hence the reason we haven't got this particular chart set up for the first half of FY22. But as part of our full year results, we will certainly have all that information for the market to be able to fully view. All right, I'll just flip it over to the next slide to take you a little bit through the Lonsec business. So those of you who don't know Lonsec is probably the largest qualitative research firm within the country. It's high barriers to entry in this particular space because they obviously are doing research ratings for all the financial products out there. And one of the things that we really liked about this particular business, and we really saw the growth opportunity, was we really saw that recurring revenue on the research space, which all fund managers and financial products have to do every single year, including ourselves. But it was really the managed account space, or their Lonsec investment solution, that was really well positioned to be able to capture a lot of the flow of those funds that a lot of the dealer groups or practices couldn't do anymore, in terms of that portfolio construction, where they could take it on as an independent research group. So they were well positioned to be able to attract that sort of investment. One of the things that's really important to point out here is that we had a 3-year accelerated growth plan that we're only 6 months into. And in FY22 was going to be the year of investment. So when we were talking full year results last year, we said, look, we don't expect the numbers to grow materially over the course of FY22, but to our surprise and all of our projections, you can see here that revenue was up 24%, but really EBITDA up 22%. So the amount of extra financial products that were researched within the business, and I guess the uplift, and I'm going to show some numbers in a second around that managed account space, Lonsec Investment Solutions, really drove the EBITDA up 22%. So we've made that investment. So we really should see the numbers in FY23 and FY24 around the accelerated growth strategy that we put in place and the new personnel and leadership to run that really start to drive the financial uplift in this business, which is something we're super excited about, because I thought that EBITDA would be pretty much flat coming into the first half. There is a little bit of seasonality in that number, so it should come off a little bit in the second half, but overall, well and truly surpassing expectations. I'll just get it to flick through to the next slide now to really talk about where we saw the turbocharged side of the business, where we saw the growth opportunity. So like I said, recurring revenue on the research side, growth opportunity within Lonsec Investment Solutions. And that's really played out nicely. So you can see here, June 20, this is when we were looking at the business. We did the acquisition in September, October. That has doubled over the last 12 months from that $1.5 billion number to $3.1 billion. Just moving through to the last slide now, and then I'll wrap it up and pass it across to Benjo just for any questions. You can see here on the Generation Life Tax Effective Equity Income Fund, the performance there is 16% on the gross return, 13% after tax after fees. So that's certainly well above the 25% benchmark, above the ASX 200 yield that we had. It's sitting at 94%. We've got all the stuff that I've spoken about throughout the course of the presentation on the investment bond and the tax optimized series there and some of the results, and the investment linked lifetime annuity, which has just been launched, which is a lifetime annuity, so guaranteed income for life, linked to investment returns. You can construct your own portfolio, switch at any point in time. We've got 23 investment options, and the return profile of a lifetime annuity in that product compared to traditional lifetime annuities is far, far greater. So some real innovations coming into that space where we see post-retirement assets growing from around that $800 billion mark today to just over 1.4 trillion within the next 7.5 years. So limited products in that space, limited innovation. So we really wanted to play there, given the growth in that market and the lack of products that really present themselves to retirees. I'll leave it there and I'll pass it back to you, Benjo, just for any questions that might have come along throughout the course of the presentation today.
Thanks a lot for the presentation, Grant. It was great to get an insight into G2G and some of their investment products. Great to see ongoing growth within the business. How do you prioritize which channels to focus on?
Well, to be totally honest, what we're doing is we're hiring extra BDMs to make sure that we've got, I guess, sound focus on both the investment bond and the lifetime annuity. We feel really confident on the Lonsec side. We've got some great people in there. Michael Wright, who's the new CEO of that business, has done a phenomenal job in terms of getting everything in place. And we can see the results coming along much quicker than what we anticipated. On the other side of that, the investment bond business has got great support now out in the marketplace. And we feel like we've got, the good growth in active advisors and a good strategy. And then the investment linked lifetime annuity, we've got some of our BDM team really focused on going out there into markets where we see the biggest opportunities. So in some of the states where there's a lot of retirees, where a lot of the financial advisors there really focus on the retirement space. So that's where we're attacking first. So we did a lot of research, a lot of homework to make sure that the distribution and marketing strategy was going to be able to maximize, I guess, the three core areas or pillars of growth that we see within the group.
Now, do rising interest rates impact on G2G's reported profit, or do you expect that it will?
Oh, look, we're impacted by markets like everybody else. If you've got funds under management of 2.2 billion, depending on which way markets go, of course, that can affect our financial profile. But in terms of the use of our products, we don't see that happening at all, to be totally frank. When you look at the investment bond, 55% of our inflows, and these are some of the ancillary benefits that I didn't even touch on today, it can be constructed as a non-estate asset. So a lot of people are using it for estate planning purposes, where they've got high conflict families, blended families, or want to leave something directly to grandchildren. Because it can be constructed as a non-estate asset, they can carve that out, not let that go through their estate into their will, etc., and leave that for their own beneficiaries. So when you look at these sorts of core uses, rising interest rates really don't impact us, except for the FUM if markets are affected. On the other side of that, the lifetime annuity, Really, that's for people going into retirement, and all, there's about 500,000 people going into retirement just over the next 4 or 5 years. So these people are looking for income-driven strategies. So we see the market opportunity growing within that space, regardless of what's taking place in interest rates.
Thanks for that. Just time for one more question. You touched on the competitive landscape. How do you think about continuing to scale a business from here?
Oh, look, it's really involved in some of the strategies we've got there around the product. So, the tax optimized series will continue to put more funds into mandates, and we'll be able to, broaden the menu and the selection and choice that our investors have. And within that, we're obviously going to be doing more marketing and more focus in our investment linked lifetime annuity, and we want to get that business to scale as soon as possible. The break even point for that is between about $600 or $700 million worth of funds. So really, we want to get that up to scale quickly. And like I said, we've got a great strategy. We've hired extra BDMs within the Lonsec business to really turbocharge the growth through the managed account space, that Lonsec Investment Solutions. And we feel like we've got great leadership in there now. We've got the right team. And, we've gone from about sort of $50 or $60 million of inflows a month, sitting at about an average of about $140 million of inflow a month. And we want to continue to see that grow over the course of this, sort of calendar year as well. We've got some ambitions in there. I won't state numbers and give projections, but we certainly see that heading in the right direction right now. So all those businesses, the managed account businesses at scale, and we continue to scale up. We've got more investment in the investment bond business that will continue to scale up and see that hopefully grow over time. And then it's just a matter of, having the right BDMs, which we feel like we do, and we feel really confident with our sales team to be able to get that investment linked lifetime annuity life income to scale as quick as possible, and also get ourselves on a lot of approved product lists, so financial advisors can start to write the product with their clients. So very, very strong, sales and marketing strategy in place to continue to grow the business at record rates, hopefully.
Awesome. Thanks a lot for your time, Grant. Unfortunately, we've run out of time, but all the best going forward.
No worries. Thanks very much, Benjo, and thank you to the NWR team. Much appreciated to present today on GDG.
Thanks a lot, Grant. Cheers.